Yngve Slyngstad, thank you very much for talking to Bloomberg. Now, your fund, when I look at it, was set up in essence to profit from globalization. Now we have that global order under attack, we have trade barriers growing up, we have the possibilities or the reality of a trade war. How much difference does that make to what you're trying to do?
Yes, you're right. Of course, we're a very global fund. We're invested in more than 74 countries now, and we don't invest in Norway at all. So our investments is based on globalization. And of course, there are some disturbing signs about the development of that big trend, which has really been happening for 30 years now. And of course, the interesting thing is to see whether this is a rupture in that trend or whether it's just a small bump in the road.
But have you changed your asset mix because of the trade war?
Not really. We have roughly 70% in listed equities, and that's still what we're having.
And there isn't a move to rethink, say, China within that?
Well, I think everyone has to continuously think about China, because it is the most important aspect of globalization. The miracle of the growth of China is, of course, probably the most important thing of our generation. And what happens to China going forward is certainly very important for the whole world economy, therefore also for our investments.
You're well known for taking a strong interest in China, going there every year. Have you noticed a kind of change recently? Has this trade war affected what's going on there, particularly in the economy?
Well, I try to go 1 week every year and visiting 20 to 30 companies, and so far it seems like it's business as usual, but we'll see how this develops.
And looking around the rest of the world, do you think that the main impact of the trade war is going to be on the emerging world, or where do you see things?
That's quite possible. Of course, there will be a rupture in trade potentially. The interesting part, kind of longer term, is whether the global supply chain will get reconfigured, and whether that's actually going to be more like two regional ones, one centered on the US and another one centered on China, or whether you're still going to have a globalized supply chain as we have today.
And as an investor, how could you seek to profit from that? Give advice to people watching.
Well, we think that investing is, of course, all about the future, but it's hard to predict the future. So our starting point is that we just invest an equal slice all over the world. We have investments in more than 9,000 companies and a bit more than 1% on average of the world equity markets.
Can I ask you about the way you do look at that investing? Sustainable investing, one of the reasons you're here. You're famous for taking a quite strong line on that, avoiding some commodities, palm oil, a whole variety of different things. I wonder, how has that worked out in terms of the returns you get from this? Is there a conflict between environment and finance?
So far, we haven't seen that conflict at all in our return for the 20 years we've been up and running. But this is, of course, a fund for future generations, and we have to have a perspective of many years forward. And with that kind of a perspective, and given that we're invested in a slice of the world, of course, we have a vested interest in a good and sustainable economic development. And that's why issues like climate change, ocean management, etc., actually will be relevant for the fund.
And do you take that into account? Do you take into account the sort of, I suppose, the political pressure of young people who are worried about these things when you do your investments?
Yes, there are a number of companies that is listed in the world that we wouldn't be invested in. It may be for ethical reasons, we have a special council of ethics, or it may be quite simply because we don't think it's sustainable business models if you take into account all the externalities that these companies are creating.
And that you've had a recent focus on oceans, I've seen. Is that, which category does that fit into? Is that from the point of view of trying to do good, or is that from the category of trying to make money?
Well, there's only one category, and that's trying to make money.
Yes.
We just think about it in a very long-term aspect, and that's why we kind of look at that bigger risk picture.
Well, last year you kind of shocked the world by saying you were going to move out of oil and gas stocks. That is now with the government, and you saw there was an expert committee which recommended against that. What do you expect to happen there? Give me the plan.
So the starting point is, of course, that this fund has actually been put up to diversify our reserves of oil, and we have been producing oil now for 47 years, and there's probably another 50 years to go. But in that transition, of course, it may not make any sense for us to diversify from taking up oil to invest in oil companies around the world. So this is again a purely economic thinking about what will the total wealth of the nation look like, and that's why we said maybe we should have less reinvestments of the fund into the same industries.
But do you see the government giving you permission to do that or not? Has that been stopped?
No, this is a contentious issue that is currently debated. Of course, it goes to the heart of a lot of the things we're thinking about in the country. We are an oil nation, but at the same time very concerned about the developments in things like climate, etc. But at the same time, this is a very important industry for Norway. But the arguments that we come up with is pure economic with regards to whether the fund will be more or less diversified by having oil stocks in the portfolio.
And I'm intrigued, do people like the Saudis, do people like other Arab states, other petro-states, if you want, are they coming to ask you questions or advice about how they should do things like this?
You know, we create our own investment strategy, and if people want to look at how we're doing it, that's of course something we're very open to, but it's not like a lot of comparing of notes between the different sovereign wealth funds.
Imagine the government doesn't give you approval to divest from oil and gas. Are there other things you could do that would limit your exposure to the oil and gas sector?
Well, I think the most important thing that we've done so far is divestment from the coal industry. I think of the energy sources, coal is probably the first to go, and oil will be with us for many, many decades.
What about your global property investments? I looked at those, and what's interesting about them is you have focused those on the sort of big global cities, New York, London, Paris, along those lines, but the pace of expansion has slowed a bit. What's the reasoning there?
Yeah, we first of all, you know, in practice we only invest in 10 global cities, except in addition, of course, invest in global logistics. And these are kind of the major metropoles of the world that will benefit for globalization. And people, young people want to live and work there hopefully in the future. So we think these are cities with a long and strong growth prospect. But we haven't really found pricing these days that attractive. So we haven't really invested that much for the last couple of years.
So it's a quick question of the prices there getting too high and you reacting to that rather than a kind of shift against big cities.
It is. Our long-term strategy is still to continue to build up the real estate portfolio, focusing on these same cities. And they all have as an aspect that, you know, there's a human capital element where we think real estate will do good over time.
There's one particular city which obviously jumps out at the moment, which is London. Most people, I'm going to take a rough average, most people looking at the whole row about Brexit would say there is a 20% chance of a hard Brexit or an uncomfortable Brexit. You know, what difference would that make to your view of London?
Well, I think our confidence in London is strong, not first of all as a financial center, but as a world capital to an extent. You know, there's a lot of activity that goes on there that is key and crucial for the world economy. So we will be long-term investors in London and UK in general.
But over the past couple of years, whilst Brexit has been an issue, have you pulled back from deals in London at all?
No, we're still looking at attractive properties if you can find them, and we haven't really changed our view on investing in London.
But do you see London still as a rival to New York as being one of the great cosmopolitan entrepreneurs, or do you think that maybe it may have peaked?
Well, I think, you know, we will in any all of the regions with regards to time zones need to have a strong financial center, and of course in the US it's New York, and in London it's going to be London's going to be the one for Europe. And the question then of course is where in Asia do you put up most of your efforts? And we have a Shanghai office kind of looking at that as a long-term positioning for the fund.
Do you see Shanghai as the natural kind of commercial capital of Asia in the long term?
It could be. If you look at its positioning, it's kind of the hub of the name there if they wanted to go that way. But of course there's strong competition also within China from Hong Kong and Beijing. So we haven't seen that strong growth in Shanghai's financial center as we had expected 10 years ago.
And the huge new kind of teeming cities of Africa and places like that, is that something that you would get drawn towards, or is that currently a bit too risky for you?
That's not on the near-term horizon.
Take me through the big tech giants. I looked, and just purely because of their weight in indices, you look at Apple, you look at Amazon, Alphabet, you know, those are becoming a large part of your portfolio. You recently said you were analysing the risks caused by that. Can you give me a sort of a broader picture of what that means?
Yeah, I think in addition to globalization, of course, it's a digitalization of the world economy who's been a big trend for the last 30 years. And you see these companies have become very large. And just an example, our investments in Apple is larger than our combined investments in India. Right? Our investments in Facebook is larger than our investments in Russia. Our investments in Amazon is bigger than our investments in Brazil. So you think about the size and the scale of these companies, and of course it's something that we keep spending a lot of time and attention to.
But just take me through two aspects of that. One is kind of regulatory. You know, do you, in your mind, have you kind of factored in a risk of these companies perhaps being broken up? When Standard Oil was broken up, actually investors did brilliantly well out of it.
Well, I think in the fast-developing sectors like this, you will always have changes to the business model, and I think particularly with regards to information management in the wider sense, you will always have these questions from society at large, how they deal with information and how they deal with sharing information, and I'm sure that these companies will face those issues for the years coming.
What about within your portfolio, the fact that, as you say, they have this outlandish thing? Is there anything you can do about that other than perhaps slightly disinvesting them?
No, I think we are of course large investors in these companies, but they are very large companies also. So in the bigger scheme of things, also the Chinese internet giants like Alibaba and Tencent are some of the more interesting companies in the world, and we of course have to follow them quite closely and be invested.
Do you worry at all about the prices? I mean, again, you look at some of these companies. Amazon's a good example. Most of the calculations I've seen about Amazon share price, those rely on it eventually producing very, very large profits, perhaps profits that a regulator would not want.
That is, of course, one of the themes that you really have to sit and consider in investing in these companies. But they deliver real goods to the world's population, and there is a huge desire for people to have search, iPhones, etc. So I think you can be concerned about pricing in these companies as you're concerned about prices in the equity market in general, or the world financial markets generally. Our job as investors is to spend a good part of the time to think about what can go wrong.
Are there any particular areas that you look at now and think of as being cheap, and which ones you think of being expensive from a long-term point of view?
No, I think again most of the focus for the last 10 years really since the financial crisis have been interest rates and what is going to happen with interest rates, and is there any possibility that inflation will pick up and therefore affect the whole pricing of the world assets.
And are you worried about inflation? Take me through that.
Well, it's one of the things that you have to spend some time thinking about, and the question is, of course, whether inflation expectations are well anchored, as the central banks like to say, or whether there is a possibility of a breakout one way or another. Can, of course, be deflation also.
Is there any particular country where you see that kind of worry about breakout? Is there any place which stands out? Are you worried about inflation in America, for instance?
No, but what you see is that is a current topic in quite a few of the emerging markets. What you see in the US is, of course, a labor market that is very strong, and budget deficit in addition to low interest rates, and everything else equals that can, of course, influence things like wage inflation.
You're a very interesting fund because you're almost impeccably global, as you say. You don't do Norway. You look around the world. Just going back a little bit to the tech companies, I wonder whether you think the attitude towards the tech companies that make up such a big part of your portfolio inside Europe seems to be the place that wants to regulate these people most. Do you see that as partly nationalism, or do you think that as just the Europeans being more rational than the Americans?
Well, I think there's many things going on, but there is an internet economy surrounding the big US companies, and there is another internet economy surrounding the large Chinese ones. But Europe do not have the same type of companies, and therefore, of course, regulation is more tempting.
Yes. And on the same topic, the idea of technology, you look at your own trade, you look at all the things to do with algorithmic trading, all this sort of stuff, quantitative strategies. How much do you think technology is changing what you do on a day-by-day basis?
Well, it's continuously changing the markets, and we have, of course, been concerned about how the equity market is working and how trading within the equity market is working. We trade these companies in milliseconds around the clock. The question is whether that kind of trading actually leads to good capital allocation or not.
What's your earliest idea about that? Do you think it does?
Well, I think we have created stock exchanges not first of all to raise capital, but to continuously keep trading the same companies, and this may not be the best purpose for those institutions.
That's good. And that was the last thing I was going to ask you about, was actually the future of finance. In some ways you're the biggest part of it, but you're also actually quite a big critic of various elements. If you had to look forward, in New York at the moment, if you looked at Wall Street in 5 years' time, How would you expect it to be different?
Well, it's a difficult question to answer, but I think it's obvious for everyone that finance is one of the industries that will see major changes in the years coming. And of course, the whole digitalization will affect everything from retail banking to the way we do capital management.
And do you think, particularly that thing you talked about, the over-trading, do you think that is going to come under threat?
That is quite possible. I think the capital markets has to be clearer on what is actually the purpose of finance and how does it serve the bigger society's interests.
Do you sense any idea in which power is moving from the traders, the salespeople, towards fund managers like you? You have the money after all. Perhaps not the salaries, but you have the money.
Yeah, well, I don't think that is necessarily the biggest trend, but the question is what expectations those who save money with those who manage the money has to the way that the capital markets are put together and how they want the industry to develop. Of course, in the finance industry, we are serving someone else, and those are the ones who have the assets.
But is there one particular thing, if you're one of the regulators trying to run finance, is there one particular thing that you would try to change?
Well, I think you have to rethink the role of the stock exchanges. You have to make it more attractive to become a public company at an earlier stage, and you have to get the stock exchanges back to the role of raising capital and getting a good functioning capital market through capital allocation with those very same institutions.